So what if I told you that your daily cup of coffee could be costing you $1 million? That was the message sent by finance expert in the US, Suze Orman, where she came out and said that the younger generation are wasting away, or peeing away, as she said, about $1 million by their daily Starbucks habit. Today's video, I'm going to get into the numbers, see what exactly she said on this, whether the numbers actually hold up, and dig a little deeper to see what you would need to do or how this would work to come up with $1 million simply by skipping your daily coffee. I think there's a hidden message in here really that is useful for everyone to know so they can make the right decision for themselves. So first, let's get into the quote that Suze Orman said, and then we can break it down a little bit further using a compound interest calculator. So to Oprah, she says, do you know if you were 25 years of age and you bought a Starbucks every single day, and rather than doing that, you put $100 a month into a Roth IRA, which is a retirement account, and you did that every single day until you were, well, let's say 65, starting at 25. You average 12% on your money over all those years. Do you know that at the age of 65, you'd have $1 million? So all of you are paying $1 million down the drain. So that was her quote on this. All right, so let's get into the numbers a little bit with a compound return calculator and just see how these numbers look that she gave. Okay, so on my screen here, I've got a compound return calculator that I use at nerdwallet.com, which I find quite useful and very good for this. So let's go through it. So the initial deposit I just put as 1 because you need to have greater than 0. The contribution amount, she said $100 every month for 40 years. At an estimated return of 12% per year. I selected compound frequency as monthly, and that is correct. We see a total balance at the end of 40 years of 1.1 million. So her numbers are actually correct. And to be fair, it's pretty shocking when you think about $100 a month to get up to 1.1 million. But, and there's a big but with this, and the first thing that jumped out to me when I read this quote, and this is where I have issues with it, the estimated return of 12%. That is very optimistic, overly optimistic in my opinion, because, well, the S&P 500 we know historically returns around 9.8% if you go way back to the beginning. So if you think you're going to invest and get a 12% return, you therefore have to overperform or outperform the S&P 500. This is notoriously difficult. Even some of the greatest minds in finance struggle to do this over a 10-year period. Imagine trying to do it over a 40-year period. So I think the 12% return isn't really realistic. But it did lead me to start playing around with the numbers a little bit and see what sort of numbers would work around this to hit the million mark in and around 40 years time. So if you're 25 and finished at 65, for example. So let's mess around a little bit. Well, let's change the contribution amount, and we're going to increase that up to $180 per month. So how did I get that? Well, I just kind of worked off of 30-day month. On average, there's 30 days in a month, if you average over the 12. And then I worked out about $6 a day. Now, that $6 a day could be a coffee, it could be a breakfast, it could be whatever, but some sort of frivolous spending, let's say on a want as opposed to a need. And if you were to reduce that and take that $6 and invest it over the month through the years, how much would that actually be? So we're looking at 40 years of growth of 40 years still. We're happy with that. And then the return, I'm going to reduce that down to the S&P 500's return of 9.8%. And the compound frequency monthly. And lo and behold, $180 a month inputted into the market over 40 years at 9.8%, the historical return, you'll get your $1 million here. Okay, that to me is a much more realistic goal or outcome that you could expect over that 40-year time period. But there's a couple of things about this that I found absolutely fascinating, okay? And one thing in particular that I think is mind-blowing, and I think everyone should know before they make that decision to save that $6 a day or spend it on something that they want rather than they necessarily need. But if you look at these lines here, you can see there's the green and the blue. And if I hover just at the end here, it will give me a breakdown of the total balance that we see above, the $1,071,000, and then the total principal of $86,000 and the total interest of $984,000. This absolutely blew my mind. What is this saying? Well, the total principal of $86,000, that's how much that's actually gone out of your pocket into your retirement account, savings account, investment account over that 40-year period. So the $6 a day times 30 30 days in a month times 12 months times 40 means that you've actually spent $86,000, 401 over that 40-year period. It's actually not that much when you think about it over a 40-year period. But the kicker is that the return from the market, this isn't even money that you had to put in. This is the market giving you this back. Your return, your reward for holding this for 40 years, never selling, and just seeing it through, riding all the ups and downs of the stock market. Your reward for that is $984,000. So at a cost to you of $86,000 spread out over a 40-year period, only $180 per month, at the cost of you of $86,000, you're gonna get $1 million back on your 65th birthday, let's say. That is truly phenomenal. And the 984 grand just comes from the market. It's at no cost to you. When you look at these numbers, now you know, and before you make that decision to spend that, whether it's a coffee, whether it's something else, whatever, $6 a day, could you not put that into a retirement account like a Roth IRA in the US or an ISA in the UK, tax-free savings account in Canada, for example, whatever. If you put it into that, you would have $1 million at 65. And the best of all, in those accounts, they're tax-free. So you wouldn't even need to be paying tax on that money. It would all come back to you tax-free. You would have to have around 30% more than $1 million in order to get that same money back, because you'd have to pay tax on it as you took it out. But in the non-taxable accounts, far more tax efficient. This is a great way to do it. So if you're going to do this, and I highly recommend you do, then look at a Roth IRA, tax-free savings account, or an ISA in the UK, and do this over the long term and get $1 million back in 40 years time when you're 65. You'll be so happy that you did it. Another thing to keep in mind, finding $180 or pounds or whatever per month is going to get easier as you start earning more money and as you get older. Might be a little bit of a challenge now, but go for it. As you get into your 30s and 40s, that's going to be nothing. So it's going to get easier for you as time goes on. Of course, if you listen to my channel, you would know I would advocate for putting more in than 180 if you can afford it. So you should always think about getting the maximum in that you can afford. But 180 should be able to do it by cutting back in some of these areas, like potentially a daily coffee if that's you, or breakfast or lunch or whatever. Look, I'm really passionate about this stuff. That number of $86,000 is a cost to you in order to get $1 million back at 65. That really blew me away. I really wanted to do a video on this and let people know so they can decide for them which they would rather do, the coffee or the breakfast now, or having $1 million when they're 65, ideally tax-free in a tax-free savings account. I recently did a video very similar, why your net worth will absolutely soar after your first 100K. Here's a link to it here. Click on that one. I'll see you over there, and I wish you all the best in your investment.